Okay, good morning. 3, 2, 1, go. Good morning. Welcome to the FX Street webinar. My name's Ian Coleman. I'm going to be your host today. These sessions are called time frame breakdowns, which is we used to do a morning report on FX Street that was named time frame breakdowns, and we're going to discuss how we can break down the currency pairs all the way from the weekly charts down to dailies, 4 hourlies, hourlies, and then into 5 minutes to try and get our triggers. What we should be looking for. I'm going to try and keep it pretty simple. Not going to overcomplicate things. Some analysts or traders have an array of technical indicators, moving averages, oscillators on the charts. I do believe that you only need a certain amount. You need a certain amount for support and resistance. You need a certain amount to indicate your breaks. If you've got a basic knowledge of chart formations, Japanese candlestick formations, and a good background into what the oscillators that you're using actually mean, then there is no need to overcomplicate your trading analysis or your technical analysis. Okay, the currency pairs that we're going to discuss today are all the yen crosses. We've got dollar yen, Aussie yen, and euro yen. We might even have a look at sterling yen. It's not a currency pair that I trade, just on the basis that I find it extremely volatile. And I'm not saying that I like slow moving pairs, but sterling yen, you really can get whipped around, especially down in the shorter time frames. Okay, the settings that we've got on the charts, we've got, I'll just click onto here and it will show you all the settings. You know what we've got, that many pivots on it. Okay, we've got the moving average, we've got 20 moving average, we've got the 50 moving average, and we've got the 200 moving average. We've also got our pivots, support and resistance for today. Down the bottom, we've got the RSI, the Relative Strength Index, and that's set to 14, the normal settings. We've got the MACD settings, 12, 26, and 9. And we've got our momentum indicator set at 12. One thing that we do, if anybody has been following the blog, or came to the webinar last week, one thing that we always do is we just draw a central line on our RSI. Some chart packages already have that on there, but this is really to give us a view on whether or not we're in a bullish or bearish trend. A lot of the time, the market will move back to the 50 level, only to push lower again. So while we're underneath the 50, we consider ourselves to be in a bearish trend. Above the 50, in a bullish trend. We use MACD for the purpose that it was set out for, and that is to show us conversion and divergence. I don't really use it. I sometimes use it for crossovers and the crossing the zero line, but its real purpose is to show us divergence. And a lot of people, a lot of traders do use crossovers. I do find that you can. The crossover is a moving average. So if you want to put moving averages on your chart, have them up here. Okay. This is to show divergence. And here you can see a divergence here on this dollar yen weekly chart. Chart made lower lows. Okay. MACD made higher lows. We got the cross after the higher low, and that's warning of an impending change of direction. Okay. Momentum, markets move on momentum. If we're below zero, okay, we're in the sell zone again. Above zero, we're in the buy zone. We also look to our momentum indicator and our RSI for possible divergence. So this is how we set out, or this is how I set out my charts. Okay, here we've got the dollar yen chart. This is the weekly chart. As you can see, we had a strong trend line here, moving really all the way off the 2007 high in July, clips in August 2008. Again, holds the trend line. Here we've got our divergence. We've made a wedge here, okay, and we've broken the wedge in the week of the 22nd of March. Note how we also pushed up through our moving average, okay, stopped and paused at the 50 simple moving average, and then push higher again. This week we are coming back slightly, but wedge formations are normally quite impulsive, okay, so you should be expecting a move up towards the previous higher and towards the sort of 10,000 mark possibly in this pair. Okay, we're going to break it down onto the daily chart. I don't know what the RSI is. I've had these all set earlier. Let's just click that on. If anybody wants to ask any questions during the webinar, please feel free. We are going to, well, I am going to try and wrap it up by about 5 to 10 to 12 UK time, just because I obviously want to, I don't expect anything to happen at the B of E, but I want to be about when it happens. Yeah, we'll show the 4-hour chart in a second. We'll just break it down from the weekly at the moment. Okay, so the weekly chart, so the daily chart, okay, we break the high, we break our 20 moving average here. This is showing us that we're going to possible change of direction, change of trend, okay. It also breaks the 50 level, okay. RSI can go oversold and it can stay, sorry, go oversold or overbought, and it can stay overbought or oversold for an extended period of time. Just because we're overbought, oversold does not mean that we're going to correct, okay. What I have found is that if we use the 50 line for confirmation of trend change, then we get, well, we get more winners than losers basically. Okay, so we had our break up here. We broke the 20 SMA, moved higher, okay, came back to test, and here we had a doji day at the 20 SMA, okay. We also were holding on to the 50. We were above the momentum, okay. We rallied higher. Again, holding on, holding on, holding on. Divergence at the top. You notice here, okay, we made a higher high there, a lower high, a lower high, and a lower high, okay. So that was your signal to get out of this trend, or this upward trend. We then corrected lower in a choppy three-wave correction. We formed this corrective channel. Again, we get a break here. If you notice, momentum up. We've got a MACD cross there. RSI up through the 50. A doji day on or above 20 SMA, and the pair rallies up. Okay, so what can we expect from here? Let's just have a look at an ABC. I think my charts have just gone a bit skewy. Let's just see if I can reset it. There we go. Okay. Impulsive, move higher. Corrective, move lower. And then an impulsive, move higher. We haven't reached this ABC projection. that onto our chart. Okay, we stopped short. If we're going to put a fib on here now, okay, wave 1, just zoom in a bit, wave 1, wave 2, wave 3, wave 4, wave 5. Wave 5 looks like it's stopping short, so this is our, could be our corrective wave lower before our next push up. Okay, so then we're going to break it down into 4-hour chart. And you can see these corrective waves or flags. This is more of a flag formation than a correction. Moves up, okay, 1, 2, 161.8, 3, 4, very small corrections, and then rallies up. Notice how the 20 SMA holds the trend. Again, we break the 20 SMA, we break the high here, okay. I do use previous highs, previous lows. The chart is too big for the screen, I need to scroll up and down. I need to explain anywhere to make this chart smaller. Has anybody else got that problem? Is anybody else seeing too big a chart? If so, I can make my chart smaller. I think it must just be your screen share, I'm afraid. 4th button from the left at the top of your screen. There you go. Well done, Greg. Okay, so we've got 1, 2, 3, 4. Again, this, okay, holding the 200 SMA there, okay, holding the 50 SMA, breaks. I do use, like I was saying, I do use breakouts, but I have a tendency to use breakouts all the way down into 5-minute charts, okay. So we get our break here, move higher, 3, 4, and then we push up again, holding the 20 SMA. Here, we break the 20 SMA, okay. We look down to our other indicators. We've had slight divergence, not a great deal, but just at this level, we get, well, we didn't quite break there. We would have had to wait to here to break. With the let's just move that along. Sorry. Okay, so that's our break. Okay, on that bar. So we break the 50 RSI. MACD's showing us lower. The momentum's lower. After this bull run, we want to be exiting around that sort of level if you're using the 4-hour charts. Okay, you should always, if you're using a 4-hour chart for entry, you should use a 4-hour chart for exit. Okay, what I'm trying to do, I'm trying to break down charts into smaller time frames to maximize my entry and exit level. Okay, if we go to the 1-hour chart, it's a bit more choppy here, as you can see on the momentum indicator. But RSI really has stayed above the 50 until this sort of level here. Now you look to the chart at that point, okay? We are making slightly lower lows, but this whole move is not impulsive, it's a corrective move, okay? Let's put a blue line on here. This doesn't tell me to get out of the market, or if it does, it tells me to tighten up my stop losses. It tells me to wait for a break up, okay? Because this is corrective, and I'm looking for the next impulsive move higher. And here we move above the 20 SMA. Again, we look down to our basic indicators, okay? Put a line on there again, okay? So on that bar there, okay, we close above the 20 SMA, we close above the RSI, MACD's crossed for us, momentum's up. So you can be aggressive bull at that level, or you can be an aggressive bull on the break of the channel. Okay, then ride it all the way up. Notice how the 50's holding, 20's holding, 50's holding. I think that was when we had the, it may have been when we had the FOMC decision. Maybe not. 4 o'clock now. Okay, and then we move up. At this point, we get the channel breakout. Look down to the chart. We're below the 20 SMA. Okay, just there. I'm filling this up with lines. I'll just get rid of some of these. Okay, so we're breaking here, 50 SMA. MACD is showing us lower. momentum lower. You break the channel. You can get out your trade there, your bullish trade, or you can wait for your trend line break here under the 20 SMA, and we're moving lower. So where to from here? Now this is an expanding wedge formation, or at least that's the way I see it. Obviously, different traders see different things. But this to me is an expanding wedge. Now, it's the same as an ascending wedge or a descending wedge, but this is an expanding wedge. And while you're in the expanding wedge, bias is still for the downside. Okay, and at the moment it is hugging the downside trend line. We did put on the morning report this morning that we expected to move down towards 93. We're just holding it at the moment. Okay. Now basically, if I'm looking to take any bull positions from here, the things that I'm looking for, I forget all these indicators on a 5-minute chart. Okay. You must remember that relative strength, MACD, momentum, moving averages, they're all lagging indicators. Okay. The only thing that's a forward indicator is a trend line and pivots. Okay. So I don't look to these indicators on the 5 minutes, because if I did, I'd be in and out of trades continuously. So I'm looking for my trend for my weekly, gives me my long-term view. Okay, my daily breaks down slightly. 4 hours hourly. My hourly gives me my view. My hourly is my trigger chart. Well, not my trigger chart, my view chart. My 5 minutes is my trigger chart. Okay, so now I'm at the bottom of this expanding wedge. I'm looking for reasons to buy this pair. At the moment, I'm still under my 20 SMA. Okay, I'm still below the 50. A slight divergence here on momentum, so we are losing a bit of downward power. I take my 5-minute chart and I look for reaction highs. So these are reaction highs. Okay, and I've looked for a break of a reaction high to trigger a buy trade. I then simply place my stop below the last reaction low, and I'm in that trend, or I'm in that trade, I should say, and hopefully I'm in that trend. Okay, so what can we expect for dollar yen? Well, I'm expecting a move back up towards this upper trend line, and an eventual break to move the pair higher towards 97.06 area. Okay, has anybody got any questions about the dollar yen before we go over to the euro yen and the Aussie yen? Everybody quite happy about the settings, the signals, etc. Don't all go quiet on me. Everybody's quite happy with how we've set all that up. Why not use EMAs? These are just the settings that I use. The break of reaction line. What, the break of the RSI? The break of the RSI I use a 1-hour chart. Okay. For the breaks of highs and lows, I use 5-minute charts. You can mess about with your moving averages. I mean, to me, they're support and resistance. Okay. So, do you see dollar yen moving much below before the expected bounce higher? No. No, I don't expect it to move too much, no. Futures are opening up now with a bullish signal. What if it makes another low? If it breaks this line, then this formation is invalid. Okay, I'm going to move over to the Euro Yen chart now. I do use Elliott wave as well, by the way, a lot in the analysis, but I use the Elliott wave for the long-term charts. I try to not to use them on short-term charts, but I do use fib projections for targets. Okay, all the way down to 5-minute charts. Okay, there's a bit of a mixed view on Euro Yen at the moment. Let's just get rid of that too. Okay, has everybody heard of the cup and handle formation? Okay, cup and handle formation is basically the cup, the handle, and then after the handle, the market moves back down. Okay, so here we've got a possible cup and handle formation on the weekly chart. We've also got an engulfing red at the moment. Just break down to the dailies. Okay, this threw us for a bit of a spanner in the works on the Elliott wave theory. We did have our wave 1, wave 2, wave 3, and we were expecting a corrective wave up, but we broke above wave 1, and that invalidated this wave 4 count, as we know that wave 4 can't move higher than the low of wave 1. Okay. Then what we were looking for a head and shoulders formation. We broke the neckline here. The head and shoulders formation should have taken us up to, let's just get an arrow on here, up to this level. Okay, the bullish run. We stopped here. We've moved short. We're just sitting on the on the 50 SMA at the moment. Hi John, what does that mean? Electric wave to charge my laptop. Works well, but Elliott wave works better. Nice switch. Don't quite get that one. Okay, so we've moved higher. Let's just get rid of this divergence line. Okay, we did have divergence at the low here, or this second low. Okay, and then we pushed higher. Don't worry, draw trend lines on any way low. You'll see where we're. Okay, so we've got these trend lines on the oscillators at the moment. This one's broke on the RSI. We've also broken through the 50 level. We're going to break it down to a 1 hour chart. So we can do, just to get back, sorry, I'm trying to read what John's typing in at the same time. So getting back to the charts, what I'm trying to do, I'm trying to get a view of where the trend may stop or reverse or continue to, okay? But I'm also using the oscillators and the moving averages to trigger the trends and to get me in and out of the trends. Okay, I have a view, I trade with the view, but if my indicators on the short-term charts or the shorter-term charts tell me that that trade is not happening, or that trend's not happening, or the trend's reversing, then I'm out of that trade. Okay, so I do trade with a view, but I use my indicators to put me in a trade. Okay, so here again we've got the 50, the RSI breaks above 50, we go above the 20 SMA, we close above the 20 SMA, momentum's bullish, MACD is bullish, and we moved higher. Now if you look down to the hourly time frame, here we've got our trend up in Euro Yen. Okay, we did get our corrective move or our sideward move here, but it was pretty well held by the 50 SMA. So all the way up we're seeing this bullish move, and here okay we get the break of the RSI, the MACD, and the momentum again. Now we've had no indication that this trend is finishing yet. Okay, so while this trade or while this trend is still lower, RSI below 50, we're still making lower lows. Okay, momentum is below the 0 line. Okay, then you should be looking at selling this pair. We've got a bit of a false trigger here, but we are going to get false triggers. We're not looking. Listen, if I had the Holy Grail, then I'll be in Barbados basically. But this system I've found keeps you in the trend, and this is what we want to be looking at. We want to be keeping or trading with the trend, and as soon as the trend changes, we want to be out of the trade, or we want to be reversing the trade and getting short. Okay, so here, like we were saying, this is the trigger, or one of the triggers. We're bullish all the way along here. Let's get rid of that. Bullish all the way along here. And at this point here, okay, we move below the 20 SMA. Market moves below the RSI, and we go bearish. Where this pair is heading to next, why I think that is because we do have this. This could be the hand on the Euro Yen pair. What is PH? Previous high. Okay, P. Okay, so here we've got our what since not since the start of the webinar. No. Let's have a quick flip. You've got me interested now. We did a breakdown on cable, euro, dollar, and euro sterling last week. It's in a triangle formation. I'm taking sell signals basically. I did. If you want to have a look at my view on cable, John, then if you go to the blog on the site, I did a report on it yesterday afternoon. Okay. Let's just flip this over again. Sorry. Change security. I mean, I personally think that trading is, it might sound obvious, but it's obviously trying to get more winners than losers. Okay, and trying to stay with the trend as long as possible. I think too many novice traders or traders that are just starting out in the game are in and out. They trade too much. Okay, they don't try and bleed the bigger trades, and they're not. They're always looking for a change of trend direction as opposed to riding the trend. Okay, and this way of trading basically just keeps you in the trend. Okay, so here I've got my DAX. This was obviously before Armageddon. We then on our big sell-off here. Okay, finishing the wedge formation. We then retraced higher. I can see 5 waves here. They're not exactly very orthodox, as you can see. Wave 5 actually extended to 423.6 of wave 1. Okay, and this is 61.8% of the move down. Okay, 6419. That's the level I'm watching. We got a bit of a false signal here when we moved lower, just after the 50% level. Okay, but this move to me, it still looks corrective. I know we had one hell of a about 18 months or 2 years that pushed all the indices lower. But this still looks corrective to me, and I'm very wary to be buying in too much around this level. Okay, the daily chart. Got my 61.8% level on there, so we are approaching it. There's no reason why I don't think we can push up to that level. Again, if you can use this on different products. I don't know how well it works on commodities. I do watch gold and oil a bit, but the other commodities, I wouldn't know how well it works. But here, again, daily chart. Okay, moves through the 50 level. MACD is showing us positive, momentum's up. The price moves higher. And again, look at the 20 SMA. It holds the pair here. Okay, you've got the 200, you've got the 20 SMA, you've got a doji. Okay, and then it holds the pair again. It then turns positive at the close of this candle, or even this candle. And we've got to move up. Going back to the hourly chart. Okay, we've got this ascending wedge formation. Okay, towards the top, moved under the 20 SMA, which is our first signal that the trend may be changing. We then made a lower high. Okay, breakout. Really, we've been bearish on the DAX since. I'm going to just go over to the Aussie Yen pair now, because I don't think the DAX has finished its move higher. And the reason I don't think the DAX has finished its move higher, because I do watch the Aussie Yen pair as an indication of where the indices are going to go. Let's just have the weekly up first. Okay, here's our weekly chart. Such an aggressive move down. We do seem to have even missed out wave 3. Okay, 1, 2, 5. 261.8% at a double bottom with divergence. Moved higher. Now we're just around 61.8% on this pair on the weekly chart. In fact, we just clicked it. 87.70 was the high. Okay, so we have corrected an ABC. This could be, I'm not saying that this isn't the top, but when I break down the shorter time frames, I can see a 5-wave pattern that is not completed yet. So we've got the DAX short of the 61.8, but we have got the Aussie Yen sitting on 61.8 retracement on this daily chart. Sorry, on this weekly chart, I should say. And then go to the daily chart. Okay, this is where I got my false start. Okay, it broke below 20 SMA. I did write it down, but then I was looking for sell signals because I've considered this move up to be corrective, and I was wrong. But I didn't take any sell signals because I'm above my my 50 RSI. Okay, momentum's bullish, but I was looking for sell signals while this pair were trading higher. Missed opportunities. We don't all get them right. And this is what I can see now. I can see wave 1, wave 2, wave 3. We stopped at 86.94 with 161.8 projection. Okay. And we formed a top here. We've moved lower. I only expect a move down to around 85.30. Okay. And that would line up. Let's just move that off. I need to see it better. Come here. Okay, that will line up with a 23.6% retracement of wave 3. So we've got 1, 2, 3, correction wave 4. The fifth wave, if we get it, okay, will be taking us up towards 93.55 in a choppy wedge formation. So we take it down to the hourly chart. Okay, we had a false start here. Got a signal to sell. Trendline break. Move lower. It wouldn't have really cost you too much. Okay. With a trendline break here, you've moved under. You're under the 20 SMA. You've now moved under the 50 SMA. Okay. RSI has gone bearish. Momentum. Okay. It's come back out of there. The RSI turning bullish. But by the way, sometimes I only need one indicator to turn in the other direction to get me out of the trade. Or a shorter time frame, a break of a previous high or previous low. I'm looking for lower lows, lower highs. I'm looking for higher highs and higher lows on shorter time frames, 5-minute time frames. Okay. This to me is still looking corrective. And I'll be looking to around this level for possible reversals. We've also got some, we know that there's a previous high there. You can also see some resistance, which now should be support around that level. Okay, there's no reason to think that this trend's finished yet. MACDs showing no divergence. We have clipped the oversold, but like I said, that's not an indicator that I use. Okay, the momentum's still showing quite strongly to the downside. Okay. So those are the views that I've got for the yen pairs. Does anybody want to ask any questions with regards to the settings or any of the yen pairs? I'm a bit confused on finding previous days closed. We just look at a daily candle, really, Rez. Let's change this over to cable. These spikes. Basically, your candle tells you your daily close. The right hand side of the candle sorry, the left hand side of the candle is where the market opened, right hand side of the candle is where the market closed. You've got a red candle, then you closed here, 15,426. You've got a green candle, you close at the top, right hand side, 15,474. Okay? Does anybody want to ask any other questions? What are my setups? My setups are, let's go to cable. Okay, I'll show you the cable setup from yesterday. Okay, I got a false trigger here on cable. I'll be the first to admit it. I don't get them all right, like I said. Here, I wonder if you'll let me break down. What time was that? When the figures came out, it was about 9 o'clock, wasn't it? 9:30 yesterday morning. So 15 minutes. Break it down to 5. Okay. No. Like that, I use trend lines and I use previous highs, previous lows on the shorter time frame. Okay, so here yesterday morning, this move, okay, this move looked corrective. So I'm looking to my 5-minute time frame. We go to the hourly. Okay, this was yesterday morning. I know today's a different picture. We've got a descending triangle which favours a break to the downside. Yesterday morning, we had this move here that looked like a flag formation. Okay, I was also above my RSI. Okay, my momentum was up. Okay, I was losing momentum because it had moved sideways virtually overnight, but I was still above my trigger line, my zero line. Okay, I then went to 5-minute chart. Okay, and here I triggered the trade on the break. So I've got my channel. Okay, off. Okay, so I've got my channel. I break the high, which is the previous high here. Okay, so I'm entered just on the break of this high. Okay, I've got a trigger to open. If the market moves higher and I spike, if I get a spike or a doji, this is okay because it's quite a fat body candle. Okay, we have rejected up here, but I'm in down here, so I'm not coming out at the close of this candle. I always wait for candles to close. So I've got my trigger there. Okay, it then spikes a bit, but I'm still in the trade. My 1 hour chart is telling me that we're potentially bullish. I've got sidewards or a pennant or a flag formation. Okay, which is telling me that I can expect, or I've got a chance of a rally higher. Okay, I then put my stop loss to entry at that point. Unfortunately, when the figures came out, that move down was that quick and aggressive that I actually got slipped for about 16, 17 points on that trade. Okay, I'm then out of the trade. I then go back to my 1 hour chart. Okay, I then see this large doji forming. It then breaks below the RSI. Okay, momentum's down. I get my MACD cross. Okay, I then go back to my 5-minute chart. I put a fib projection on here. This is just how the chart was, how the trade was set up for yesterday. Okay, I get a fib projection there. It breaks this trend line. I didn't sell on the break of this previous low. I did wait for the trend line to break. Broke here. I sold into the trade, and I took my profit around here. Okay, before the previous low and before the 261.8. But we did actually warn on the blog yesterday to watch the previous low, that we had a possible triangle formation, and then watched this move, because I was 5 ways down. I was not expecting it to move as high as this yesterday. Okay, I wasn't in this uptrend because I'm underneath my moving averages, I'm underneath my RSI. Okay, I'm MACD on my 1 hour, so that 1 hour is telling me, or giving me an indication of my trend direction. So I want to be selling this pair, and I watched this and watched this and watched this last night, and I even had it on my laptop in the house, which doesn't go down too well with the wife, and I missed this trigger here, which I did make a big fuss about, which if she was to speak to you, she'll tell you about that. And I watched it move lower last night. If I miss my trigger, my entry, I don't go in at worse levels, unfortunately, because I would have had this decent move down today. I'm still looking for this pair to go bearish, but I won't trade into economic releases. I don't trade the NFP. I don't trade interest rate decisions, etc. But I am a bear on cable. So if I get a trigger to sell the pair, then I will. Okay. I bought that just for a bit. We did euro dollar last week, but we can flick it over. Okay. We have got. I have to hurry up though, because I do want to have my finger on the button for, or at least listen to what goes on. Not expecting anything really. This is how I see. Okay, this is my view. This is a wedge formation. Euro dollar. We did discuss this last week. This is your wedge formation. Okay, wave 1 down, impulsive, corrective 2, impulsive 3, corrective 4. This is your target area, 261.8%. Previous low here. Okay, if you take this as wave 1, it might extend down to 261.8% here. You really got to break the low here. If you break it down into the hourly chart, I can't see that happening today. Okay, I've got wave 1, wave 2, wave 3, wave 4. I've got wave 5 that looks like it's finishing in a wedge. I've got divergence. Okay, I haven't got a signal to buy the pair, and I don't like buying for what I consider to be corrections. I'm looking to sell the pair again. Okay, I'm going to be looking to sell the pair around up here, 13,400, not down here. Okay, has anybody got any questions before we wrap it up? Everybody quite happy with what we've discussed? I hope you've found it educational. Okay. Remember, these are only my views. It takes different views to make a market. Okay, just because I have certain indicators or certain long-term views, so I don't claim to be right all the time. Got to stick to the rules. There's a poster that I have on my wall that says eliminate emotions, and it also says anything can happen. You don't need to know what's going to happen in the market next in order to make money. There is a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. And the most important bit is the one at the bottom that says every moment in the market is unique. Trading in the Zone. That is correct. Great book. So you just need to get your edge, basically. You have to find an edge that gives you the upper hand, and don't stay in losing trades. No. I know there are some speakers here that think that bankers go stock hunting. Do you really think that? Oh, I've been a broker for banks, Credit Suisse, UBS, you know, for many, many years, and it's not manipulated. You think that 20, 30 banks get together and all go, right, let's go and hunt some stocks. It doesn't work like that. One man cannot move the market. One bank cannot move the market. The National Bank can move the market. Swiss National Bank moves the market on a quite a regular basis when she feels that she's being hard done by. But these banks don't get together. That's what you know. There's as a broker, you put trades together. You're not banks aren't out there to rip each other up. And a lot of flows that you do get in the market that come out of banks are corporate driven. You know, you get somebody like Esso, or you know, they have to change a chunk of dollars for the fake Swiss francs or whatever. You know, they call up a certain amount of banks, ask for a spot price in X amount of millions, and then they go around. You know, they want to shift their amount in one go. And basically, if banks read them one way or the other and realise what way they're going to look to put in this large order, and sometimes that moves the market because they think, right, well, Esso's in, he's got $500 million to move, and that might move the market. But banks don't get together. Right, I've just been given the signal that we're getting called off. Okay, because there's another session starting in 4 minutes. Okay, all the best with your trading. I'm not about next week, as I've said. Okay, so it's going to be 2 weeks' time, but do visit the blog if you want to get some trading ideas. And that's what they are, they're trading ideas. Okay, all the best. Take care. Bye now.